XRP is once again mooning, so we asked two experienced crypto investors what's going on. Ripple's XRP token is back on the rise, as bulls maintain control of the broader crypto markets. And, despite the fact that altcoin season is in full swing, XRP has posted a 5x return in 2021 to date. It also doubled in April and traded above $1 for the first time in over 3 years this week. So we asked a couple of seasoned cryptocurrency investors, what's going on? But first, a little background. Background on XRP. Ripple Labs was founded in 2012, which is a long time in crypto terms. It was founded with the intention of using blockchain technology to shorten transaction times for fund transfers between financial institutions. The concept was compelling enough to attract a $55 million funding round in late 2016, just before the first major cryptocurrency bull market. Ripple had already received funding from major investors such as Google Ventures and Andreesen Horowitz at that point. XRP, the platform's own cryptocurrency, was also created. When the crypto market went parabolic in 2017, the fiat value of XRP tokens skyrocketed from around $15C to a higher $3.50. However, banking adoption rates did not materialize, and a few controversies ensued. Ripple signed an agreement with Nasdaq-listed forex platform MoneyGram, MGI, in 2019 to integrate its technology into MGI's global transfer network. Fast forwards to 2021, and MGI dropped a bombshell by revealing that it had been paid handsomely by Ripple to use Ripple's liquidity platform, totaling more than $60 million in incentive fees. The partnership has now ended, and Ripple's founders are fighting a lawsuit filed by the U.S. Securities and Exchange Commission, SEC, in December. The SEC considers XRP to be a centrally issued security, not a decentralized commodity, like Bitcoin. It also claims that the founders did not properly register XRP before issuing over 14 billion units and generating over $1.3 billion in fiat currency, partly to enrich themselves. It's a serious charge, and trading in XRP tokens has been prohibited on the leading US exchange Coinbase. So far, how have Ripple investors reacted? We don't sneeze. Investor point of view. So, what's all the commotion about? We spoke with two experienced investors in the space to get their take on the situation. Alex Saunders is the founder of Nuggets News, an industry news website, and Collective Shift, a cryptocurrency education platform that was recently launched. Stockhead also spoke with Matt Harcourt, an analyst at Apollo Capital, an Australian crypto investment firm. Neither is an XRP supporter. It's a no-brainer for me that their software isn't that good, Saunders said. Using XRP tokens is unnecessary. Why do you need this token in the middle when Visa can use stable coins and send funds directly? He also agrees that XRP token ownership is largely centralized. They'll try to claim it's decentralized, but it's all a ruse. When you look at the technology available in DeFi, I believe, the platform, is already obsolete and out of date. DeFi, decentralized finance, is another area of expertise for Harcourt, where Apollo manages 2 investment funds based on yield farming in the DeFi ecosystem. Harcourt stated, "We're big DeFi investors. There is value for us in locking up your capital in set protocols and earning yield on that capital, because your funds are providing a service. The network effect, according to Harcourt, is the value of a platform like Ethereum. And the valuation protocols that are built on top of it are what really drive that network effect," Harcourt said. With XRP, the network effect would be recognized by banks and financial institutions adopting it to improve the speed and cost of international transactions. But I don't think there's any real evidence of that happening in their entire history. Flows come before pros. Ripple has faced some major headwinds in 2021, in addition to a relative lack of actual adoption. However, in response, the price of XRP tokens has increased 5 times. Is there anything else to the story? the market's overall sentiment remains bullish. Liquidity is abundant, and this isn't just a crypto story. Equities have benefited from historically high levels of post-COVID stimulus. In other words, flows can sometimes take precedence over fundamentals. Although XRP trading has been prohibited on Coinbase, large global exchanges such as Binance are still able to participate in the market, according to Harcourt. There will always be exchanges that trade XRP because they can profit from the massive amount of volume, Harcourt said. Binance is a for-profit enterprise. Binance has seen nearly $4 billion in XRP trading volume in the last 24 hours, so they are making a lot of fee revenue from that. How much money will be made from fees? Binance is a privately held company, but Coinbase will be listed on the Nasdaq next week. And, according to Nasdaq private market activity data, it will go public with an estimated valuation of $90 billion. It is undeniably a global market. As a side note, I have school friends who are heavily invested in XRP, Harcourt says. At this point in the cycle, there are definitely a lot of people jumping in who don't think they have time to fully understand the asset class. In that context, both Saunders and Harcourt stated that other factors come into play, such as where coins rank in terms of market capitalization. As one of the older cryptos with a large volume of issuance, XRP is comfortably in the top 10. And, at $1, its entry price is a little easier to swallow than Bitcoin's, nearly $60,000. It has the potential to be a bit of a religion. You still have YouTubers or Twitter users telling retail followers that it's going to be $500, Saunders said. There are still projects in the top 10 that I believe have no value. That is changing, but the market is still maturing. Harcourt also believes that the SEC lawsuit is viewed as a bump in the road by the XRP faithful. He speculated that Ripple would receive a slap on the wrist from regulators, but nothing near the treasury they hold, and then they'd go about their business as usual. And Apollo, as an investment firm, is wary of the XRP army. When the SEC announcement came out, I did some research and we were looking to see if XRP would be a good short opportunity, Harcourt explained. However, we decided against it because we believe the investor base is irrational and lacks a fundamental understanding of cryptocurrency. As hedge funds that shorted GME stock know, it pays to keep an eye on flows in post-COVID asset markets, lest the pros get left behind.